Hey guys, another update on the options account, and was a good week, but we'll check that out later, and I'll talk about that as we go through. So for those new here, I share 5 days, pretty much the previous 5 days, the previous week of trades, and show you the openings, closings, share with you the assignments, all that good stuff. And then we talk about where I think the markets are going based on charts, and then we look at upcoming week's earnings. So hope you enjoy. Let's dive in. So starting with the closes, couple of things happened. Okay, got early assigned, and this is a part of that big but. So on June 22nd, got early assigned Bank of America shares at $38. So that essentially makes that contract fully profitable, even though you're buying an overpriced shares of stock. Now, you could sell the stock and resell this contract and collect the money that you're off, basically. And I have chosen not to do that with Bank of America just yet, but I may. So essentially, this contract expired worthless via early assignment. So that $233 in premium is ours to keep. Next up, another one that was early assigned. That was SOXL. We were early assigned 500 shares at $25 a pop. So that ended up making these 5 contracts fully profitable via assignment. So $1,441 of option premium realized there. And what I will probably do on this one is actually sell the shares at a loss. And this is where the debate is. I'm not sure what I want to do yet. I can just resell these same contracts and collect the difference in the loss, right, in cash. So it would recover all my cash that has been, taken out of my account to buy those shares. But I don't have to use SOXL. I can go with another trade if I'd like to, and I don't have to do it all at once either. So that's that. So early assigned 500 shares of SOXL. Very good possibility that I'll sell these shares out and replace them with put contracts. Next up is QQQJ. This was a put. Closed it out for 35 cents. Profited $37 there in 30 days. ARKK, a little bit of a recovery. I'm hoping for more, to be honest with you. We was able to roll this down. You'll see that in the openings here coming up. But I closed these 7 contracts out for $10.80 and squeezed profit of $935 out of those for in 28 days. Dutch Bros closed these out for $5.42. There's 3 contracts. It was at a 40 strike. I actually rolled these down as well, and we'll see that in the openings. So I closed those out and squeezed out $212.51 in profit on those. Smith & Wesson, with the Supreme Court ruling, is going to be advantageous to Smith & Wesson. So I was able to close those out for 10 cents a piece, profited $60 there in 21 days. Would love to re-enter that one, but we'll see. ARKK, this was part of the 1111 trade that I had on, I don't know, what was it, 2 weeks ago? And it was a 30 strike that was all the way out to September. Closed those 2 contracts out for $1.11, profited $108.74 there in 2 weeks. And then my T cover call was a roll. It was at a 20 strike. Closed that out for 80 cents and lost 64.33. But we rolled that to the next, I think it was 2 week strike. We'll talk about that here in a second. And that is it for the closes. Now let's take a look at the openings, and this is a little bit shorter list. Openings, TQQQ. I do own 300 shares of TQQQ. Went out to July 29th. Strike price of $39. Collected 27 cents a piece for those, so $80 on those. There's that T covered call. Went out to July 8th. 20 strike, collected $91 for that. They have a dividend coming up, so I would imagine that these will get called away. My shares will be called away, and that's fine. I'll be able to keep the $91 in premium, and I think my cost base is like $19 on the shares. So, but if they do not early assign me, then that's fine. I'll just keep rolling this 20 strike and keep collecting premium. And there's the roll on the ARKK. Now that ARKK that I closed was a 56 strike. This one is a 55 strike out to July 29th. I got $10.30 out of those, so $7,205 in premium collected there. The difference in there was about $350, so it cost me about $350 to go from $56 strike to a $55 strike. And basically 7 contracts, the dollar difference in strike is $700 in notational. So it cost me $350 to reduce my risk, in air quotes, by $700. So I'm fine with that. And then Bros, there's the Bros roll. Rolled this out to August 19th, and I went down from the 40 strike down to the 35. Got $542 for each of those 3 contracts for $1,624. So those are all the openings. Let's take a quick look at premium cooking. So we ended the week Friday, June 24th. We closed 8 positions, opened 4. Profit realized $2,963.16. Premium sold just under $9,000. Total premium cooking $10,292.61. So a big drop there. That's because of that basically that SOXL being assigned. Maintenance margin dropped from $40,200 down to $35,900. Buying power usage is a respectable 34%. Cash balance dropped from $47,900 to $31,307. I'm looking to get some of that back when I sell those SOXL shares, but that big drop is from the assignment from Bank of America and the SOXL. Net lick, huge jump in net liquidation value, 91.5 up to 104.9. So return on maintenance margin, that's the profit divided by the maintenance margin used the previous week. So that's 7.37%. And then the return on net lick is that same profit number of, 29.63 divided by the net liquidation value of the previous week of 91.5, and that's 3.24%. So how are we looking year to date? Looking a little bit better, but man, these big swings on this portfolio, I can't wait to get away from that. So if we look here, we started the year off 123.1, final value of Friday 104.9, decrease of 14.7%. How does that compare to the major indexes? Not bad at all, because the S&P's down 18.5%, the Nasdaq's down 26.7%, the Russell's down 22.3%, and the Dow Jones down 13.9%. So not shabby overall. I typically have always tried to compare myself to the Nasdaq and the Russell as far as the options account is concerned. So with us handily beating those two indexes, I'm quite pleased, to be honest with you. So now let's take a look at real quick at charts on the major indexes. And we'll start with SPY here. Had a nice recovery last week. I don't know. I think we're going to have some selling pressure here coming into this new week. One thing that concerns me is this 50 period moving average here that's sloping down. That's going to be probably a point of resistance if we even keep going up this week. It will definitely probably stop out right there and stall out. But on the downside, I think 380 is a nice point, nice support level there. Even though this says 370, this is long term. I have 500 day average on the support and resistance there. So let's look at QQQ. Pretty much a very similar look here. That 50 period moving average is probably going to act as resistance if we keep going up. If not, this 280 line is probably good support right in there. And how's the Dow Jones? Again, very similar. You're going to have that 320 area, 323 area being resistance, and this, probably this 310 area being support. So that's the Dow. So how about earnings coming up? We got some interesting earnings coming up, and this is probably going to affect like my SOXL position. And that's the big one is going to be Micron. That's going to be one that's going to really look at the semiconductor area and really might really affect SOXL. So I might step out of the way, like I said, and sell those shares off. You got Nike. That's going to be an interesting one. Going back to last week, we were talking about the homes and Smith and Wesson. No, and Camping World. No, who was it? Was it Winnebago? Yeah, it was Winnebago. They blew out earnings. The home builders blew out earnings. So that's really driving the market, I think, right now. And now we're going to see Micron. Nike will be interesting as well. Walgreens Boots. That would be, we'll see. I like Walgreens, but definitely a value stock, but they could be a value trap. Micron, definitely another value stock, only a 7 PE sitting there. But other than that, nothing really, Nike, Micron, and I don't know, Walgreens is probably not that big of a deal, but General Mills, another nice one there. I would imagine, like I said, with all the other food stocks, they're going to have increased revenue, but also increased input costs. So might be a little rough on them going forward. But anyway, that's all I got for you guys. Hope you guys enjoyed and have a great week. We'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.